When Rakesh Jhunjhunwala passed away in 2022, his portfolio was worth over 30,000 crores, money that has now grown to rupees 60,000 crores. But here is what will shock you. Many investors started their journey at the exact same time as him, yet none came even close to his wealth. Radhakishan Damani is worth 1,83,000 crores, but 97% of that comes from DMart, not stock investing. Nemish Shah, his close friend, 3,000 crores. Ramesh Damani, not even on the list of top investors. Vijay Kedia sits at 1,300 crores. But what I'm about to reveal will completely change how you think about wealth creation because Rakesh Jhunjhunwala or RJ pulled off something that 99.99% of investors never even consider. These net worth figures are all massive numbers. Most people would be thrilled even with 5% of what the poorest investors in this group achieved. But it is intriguing how RJ started around the same time but became a multi billionaire while others only managed to accumulate millions. An astonishing fact, there's not a single dollar billionaire in this peer group. Here is the strategy that will blow your mind. While every other investor was playing one game, Rakesh Jhunjhunwala was playing two completely different games simultaneously and winning at both. While others focused purely on investing, Jhunjhunwala mastered something far more powerful. He focused on earning money or creating capital through trading and putting that money to investing for it to grow. His ability to wear two different hats for two different purposes was what made him different from other investors. He was very passionate about markets, reading several books, observing various markets across the globe during all his waking hours, which most of us will not be able to do. But here is where it gets absolutely insane, and this is something that will change everything you think you know about capital constraints. Most investors are constrained by their capital. After a point, they don't have money to invest. RJ did not have this problem. His money deployed in trading was only 1 lakh rupees as per an interview he gave to Ramesh Damani. He created more money trading stocks and put that money into investments, taking large conviction bets that created multi generational wealth for him. Now, this is where most people make a fatal mistake that destroys their wealth building dreams. For people whose predominant income is either from a salary or from a small business, there's hardly any spare money to put in stocks. So, it becomes tempting to follow RJ's playbook and trade to build capital. Most of these people jump to trade options, and sadly, 93% of them end up losing money. I know this frustration personally, the feeling of watching others make millions while you're stuck with limited capital. But here is what is crucial to understand. It's essential to understand how RJ traded to create capital. Options were definitely not a vehicle for him. RJ was a skilled trader. Most of the trading income came in spurts when the markets were trending. He was not a compulsive trader but an opportunistic trader. He knew when trading would make him money and when it would cost money. So he made truckloads of money when the conditions were favorable and deployed those truckloads when the market tanked for his long term investments. The numbers I am about to share will seem almost impossible, but they are completely verified and will show you the true power of strategic timing. RJ made 1 crore rupees when he was 28, and that grew to 200 crores by the time he was 33, from 1989 to 1993, all by trading trending stocks. That's a 200 times returns in just 5 years. That was the time of Harshad Mehta pulling the market up, and people closer to the exchange had an advantage. And an extremely smart person like RJ was the right man at the right place to make money. He then made big trading money in early 2000s bull market and then more money in 2010. All these periods, the markets were trending up. So, if there is one takeaway from RJ's trading technique, it's to go all out when the markets are trending. He would make hundreds of crores in trending markets using borrowed money because the trend favored him. Now, pause for a moment and think about your own trading experience. Have you ever made money in a bull run and thought you had cracked the code? What most new traders do wrong is that they come at the fag end of the bull run, make some money, and think they will keep making money if they continue to do what they did in the bull run. This is where they get the shock of their life. Corrections and bear markets take all their money and they leave to never return. Therefore, the first trait you need to develop as a trader is to be a realist and choose your battles well. Don't fight the market to give you what was never yours. Adapt and understand to flow with the market. Here is something that will completely change how you look at market timing, and it is so simple that most people completely miss it. The trending markets can't be identified using intraday charts or reading open interest. RJ looked for broad level market trends, a time when all is well. Let me make it a little more objective and give you the exact method I use to identify these golden periods. I determine trending periods using a simple 10 and 20 exponential moving average or EMA indicator on the weekly chart. This can be done for free in TradingView. For example, here I have plotted Nifty weekly chart with the corresponding 10 and 20 EMA indicator. You see, when the blue line or 10 EMA was above the red line or 20 EMA, the index was in a trend. That would be the period that makes money in trading. Whenever the line was below the red line, the index was either choppy or declining, clearly a period of not being in trading business. In all the periods RJ made a lot of money trading, the index was in a strong uptrend as per this methodology. Now, this is very basic. Even in trending markets, you would need to zero in on what you trade because not all the stocks and sectors perform well in trending markets, only a few do. And that is the real science in trading. If you want me to make a video detailing this aspect of trading, drop trading in the comments below. I'll make sure it comes out soon. What I'm about to tell you next is both the most powerful and most dangerous part of RJ's strategy. It's what separated him from millionaires and made him a multi billionaire. RJ did not follow tokenism when it came to trading. If the markets were favorable, he would go all out to make money because he knew that those conditions would stay for a short time, and that is a window to make as much as you can. This clearly helped him go far ahead in terms of net worth because the sheer amount of capital he created from trading exceeded the net worth of his fellow investors. I'm talking thousands of crores. And all of that came with no money used from RJ's pocket. This is insane strategic leverage. In fact, in one of his freewheeling interviews, he said he's not India's Warren Buffett, but India's Jhunhunwala because his way of doing things was different than Warren Buffett. He said he made a lot of money from leverage, which Warren Buffett would never do as he's very strongly opposed to leverage. Now, before you get excited and think about taking a loan tomorrow, hear me out. Let's say you understand when the markets will give you money and the time comes. It's time to go all out if you want to make life changing money. That is your window to beat everyone else. But before you do any of that, it is essential to build an edge. Let me tell you my personal story. This is painful to share, but it might save you years of regret. I heard several interviews of RJ telling all of what I have told you till now. I then took a personal loan without building an edge by spending time in the market. Those were my initial years in the market, and I paid heavily for that mistake. I traded futures, which again is a leverage instrument, and lost more than half of my capital in just few months. The sleepless nights, the stress, the feeling of stupidity, I never want anyone to go through that. I never tried that again. However, I built my edge in small cap stock, which doesn't require me to be very active in the markets, and that edge took years to build but has given me extraordinary dividends. The key point here is that you have to spend the requisite time in the market to build an edge and strike the hammer very hard when the favorable conditions arrive. Now, some of you might say, what's good in making money when everyone else is making money? Here is why that thinking will keep you poor forever. Well, first, it doesn't matter when you make money in markets. Second, there will always be a difference in the quantum of money you make in good times compared to others. If others are making 5 lakh rupees from 1 lakh rupees and you have made 50 lakh rupees from the same 1 lakh in the same period, you have outpaced everyone else. All you have to do then is preserve that money to put into investments if you want to follow RJ's playbook. There is an important consideration for you though. RJ could have borrowed money to trade using his stocks as collateral, which were already worth hundreds of crores. You may not have that stock portfolio and therefore the borrowing capacity. For an average retail investor, that mode of borrowing isn't available. Therefore, the grind for people like us is much bigger. You can trade futures for that leverage or build a decent sized portfolio to borrow money against, which is something I am doing. But as I said, build a trading edge first before you do any of it. Now, here is where RJ's genius really shows. His investing approach was so simple that most analysts would laugh at it, yet, it created more wealth than their complex models ever could. RJ had a different but very simple perspective. The first major long term investment of RJ known to the world is Titan. But he bought Titan in early 2000s while he started trading markets back in 1985. So when he started picking up Titan, he already spent 15 years in market observing stocks and markets. It was mainly this experience that helped him take Titan despite Titan's bruised fundamentals at the time. In one of the interviews, Utpal Seth, who worked with Rakesh Jhunjhunwala in Rare Enterprises, which was his research setup, said that if you look at Titan's balance sheet at the time, it was so bruised that no one would ever look at it as a long term investment. But RJ looked at it differently. He saw the bigger picture. He saw that the jewelry market was all unorganized, and Titan, being a reputed, respected brand, people would trust Titan when it came to buying jewelry. So, this was the start of the trend that RJ identified and he went with it. RJ followed the exact same principle with other stocks too, and he largely had mixed success. For example, he thought the same about Rallis, thinking that the agrochemical market would explode in India if it has to feed a billion plus population. But that clearly did not work out as well. Then he thought that in Crisil as well, which did well again. He did the same in Lupin, thinking that the generic market in US would continue growing and the trend of exporting cheaper generics from India has a long way to go. And he was quite right about that. His another investment in Venturous Knowledge Solutions or IKS has become big, and he invested in the company when it was being started in 2009. The play again was healthcare opportunity in the US. That stock went on to become a super multi-bagger for him. It is now the second largest holding in his portfolio. There was no complex financial modeling, no return metric analysis, nothing in Titan. Just a simple broad view analysis that made big money for RJ. If there is one takeaway from his thought process, it's that even when you only have a bigger picture in view for an industry, you can bet on a leading company in that industry which is not overvalued, respects cash flow, and has decent promoter quality with decent fundamentals. You will not go horribly wrong. In some cases, you will be massively right. That's when you pick companies like Titan, Crisil, and Lupin that will make up for all the losses and average performance in the portfolio. That is the real investing game. Even in my portfolio, in which I have gone 40x in less than 6 years, most of the gains have come from 5 names out of the 70 odd stocks that I have traded. The other bets have either been loss making or average performers. Now, here is the harsh truth that you must know when you go about replicating RJ's strategy today. When RJ was investing in these companies, the VC and PE scene was not that mature. Most companies turned to stock markets to raise funds for expansion. No wonder he got Titan when it was so small. These days, most companies in new sectors start private, take VC and PE funding to grow, and achieve size and list on the exchanges only after they have become big. Therefore, replicating his investing playbook has become 100 times harder. Instead of replicating RJ's playbook for investing, you can learn from other investors like Mukul Agarwal and Madhusudan Kela. While Madhusudan Kela's style may not be suitable for an average working professional because of time and logistic constraints, Mukul Agarwal has a relatively simple style and has a lot to learn for average investors like you and me. If you need me to make a video on Mukul Agarwal's investing system, drop Mukul in the comment box below. To be very honest, it's extremely tough to pull off what Rakesh Jhunjhunwala pulled off in trading. So, it's good to be aspirational, but don't get into the game with an objective to match his performance. Even if you are able to achieve 1% of what he has achieved, you'll be amongst the top richest of the country. And that is not a bad outcome. So, don't take undue risks that put you back many years. Don't take leverage loans that you cannot manage to repay if all your trading capital goes to zero. Always safety first. Whichever path you choose, just remember you don't have to gun for an RJ equivalent net worth. With that objective, you will be overwhelmed by the tiny appearance of your successes. Instead, focus on the process. Try to get better with each market cycle, sharpen your edge, and keep no loose ends. Most importantly, don't fall for get rich quick methods like options trading that make no one rich but your broker. The real question isn't whether you can become the next Jhunhunwala, it's whether you have the patience and discipline to build the wealth the right way. With time, your tiny successes will build up to a massive net worth in the long run. Drop trading in the comments below if you want a detailed video on identifying trending markets and the exact stocks to trade during those golden periods. Drop Mukul if you want to learn about Mukul Agarwal's systematic investing approach that's perfect for working professionals who can't watch markets all day. Thanks for watching and stay sharp.